the bottom line is that we're seeing silver come into the United States. In January, 2,586 tons have come in that we know of, which dwarfs for any single month, any month that I can ever remember seeing, at least in a very, very, very long time. And so whether we're talking about gold coming in or silver coming in, it's really the epicenter of all this is in London, and London's in trouble. We've seen a lot of the unwinding, or you will, the hedging of the positions, covering of the positions that are naked here with all the gold coming in. Perhaps that's why we've seen gold go up so much over the last several months, is that the American bullion banks were aware of what was coming. I don't think they've even begun to do this with silver yet. So all of those people waiting for that moonshot in silver, waiting for silver to catch up to gold's performance.
With silver prices setting fresh record highs outside the US dollar, investing in the precious metal is inching towards the mainstream, reports The Economist magazine. Leading analysts forecast a wide deficit of supply to meet global demand for the fifth year running. 24 of the 25 analysts entering their silver price prediction into this year's LBMA Forecast Survey are bullish for 2025. The other projects that silver's average price will match 2024's decade record in dollar terms also foresee an intra-year peak above $40, almost 25% higher than current levels. In this video, president and owner of Miles Franklin, AndySchectman, mentions a historic shift in gold and silver markets, with institutions prioritizing physical bullion. He warns that the LBMA faces growing pressure as silver inventories rapidly shrink. As the largest silver withdrawal in LBMA history unfolds, Schectman urges investors to take notice, suggesting that silver may finally be on the verge of a long-awaited breakout. Data from the London Bullion Market Association, LBMA, show that silver stocks in London vaults fell by 8.6% in January, marking the largest monthly drop since the LBMA began tracking data in 2016. The total silver held in these vaults now stands at 23,528 metric tons, valued at approximately $23.9 billion. Despite the strong rally, some analysts warn that silver remains highly volatile and its future trajectory is uncertain. Silver has historically exhibited larger price swings than gold, often moving twice the magnitude of gold's price changes. While the current momentum is strong, past trends indicate that silver's gains can be quickly reversed. Regarding London's settlement delays, Schectman sees mounting market strain, with U.S. banks adapting while European counterparts remain vulnerable. As Basel III reshapes the landscape, banks scramble to hedge against the growing risks of naked short positions. Now, we present the clips of AndySchectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
We see things happening in the gold and silver market now that we've never seen before. And I think it's something that we should be very cognizant of. The basic premise is that central banks and institutions and, I don't know, family offices, sovereign wealth funds, they're more concerned now about amassing real physical bullion than anything else. And the target of all of this seems to be the LBMA more than anything. We've talked at length about how the LBMA has, in essence, a float, and has had a float that's been relatively stable in silver for quite some time, of about 290 million ounces, that is trading off of roughly 2.9 billion ounces per day of paper trading, or 3.5 times the annual global mine supply, or 10 times the amount of silver behind it. In other words, the paper to physical is 90% paper to physical. That's what the Hunt brothers saw in 1980. More paper, less physical, and so they exploited it. Well, you know, since November, when the U.S. has become a net importer of gold, quietly the same thing is happening with silver. It hasn't really been publicized quite as much, but we saw over 70 million ounces of silver leave the LBMA in January. That's an all-time monthly record, or about 20% of the float. There's only about 270 million ounces that remain that are not encumbered. So in other words, there's about 780 million ounces total, of which only 270 of those million ounces, 270 million ounces of the just under 800 million are available. The rest are encumbered, belong to ETFs or the Bank of England or who knows who. But the bottom line is that we're seeing silver come into the United States. In January, 2,586 tons have come in that we know of, which dwarfs for any single month, any month that I can ever remember seeing, at least in a very, very, very long time. And so whether we're talking about gold coming in or silver coming in, it's really the epicenter of all this is in London, and London's in trouble. Everyone's talking about how they were a T+1 settlement that's now gone to T plus, 60. T+90. They're taking an inordinate amount of time to deliver the metal that they are required to be able to do so in just a matter of a couple of days. And everyone's been focusing on gold, but it's very important to realize that this is happening with silver as well. And, we've seen a lot of the unwinding, or you will, the hedging of the positions, covering of the positions that are naked here with all the gold coming in. Perhaps that's why we've seen gold go up so much over the last several months, is that the American bullion banks were aware of what was coming. The European banks are still very much exposed. I don't think they've even begun to do this with silver yet. So all of those people waiting for that moonshot in silver, waiting for silver to catch up to gold's performance, maybe we're right there. Because with the Basel III implementation coming into effect, which really is about gold, I think they're kind of trying to shore up their books across the board, realizing that being naked short in an environment where the world is accumulating physical, where the world has lost trust, is really very dangerous as a mud wall. And I think that's something that is being recognized by the banks here in the U.S. As much as I almost choke on saying that, maybe they realize that this is an existential threat, and if they are going to let anyone fall on the sword, it looks like it will be those European banks that are part of the LBMA. This is getting very serious very quickly, and to see the largest withdrawal ever out of the LBMA is something that people should stand up and take notice of.
Seasoned market analyst AndySchectman emphasizes Deutsche Bank's doubts about the U.S. dollar's safe haven status and notes central banks have sold U.S. treasuries since 2014. He views accelerating de-dollarization as nations quietly reduce dollar reliance while increasing gold reserves. Despite media downplaying it, Schectman underscores the Russia-China-Iran naval drills as a clear challenge to U.S. dominance. He links this to a broader move away from dollar hegemony. According to CNN, these joint exercises highlight the growing strategic convergence among China, Russia, and Iran, three authoritarian regimes that share a mutual interest in challenging the Western-led global order. This year, the stakes are even higher as Trump's foreign policy shifts continue to disrupt global dynamics, including a more conciliatory approach toward Russia and a push for America's Asian allies to contribute more toward their defense. The world ganged up against the U.S. dollar as the White House weaponized the currency to destabilize the economies of developing countries. The sanctions imposed on Russia in February 2022 ruffled many feathers, making BRICS kickstart the de-dollarization agenda to safeguard their economies. BRICS made the U.S. dollar the villain of the world, convincing other countries that it's stunting their growth. Ultimately, Schectman believes that while Trump's return may temporarily slow the BRICS agenda, it will not stop it. Let's get back to the interview.
I think people need to understand that what the Bank of International Settlements did to the BRICS at the 12th hour, I think they've changed the way that they are going to be open and forthright about their developments. And I guess to me, de-dollarization is not stopping. In fact, net since 2014, there hasn't been any central bank buying of U.S. Treasuries. Net, they've all been sellers and buying things like gold. And certainly the unwinding of the Japanese carry trade is not going to be bullish for the U.S. and U.S. investments. And I think will only further incentivize de-dollarizing and getting away from the traditional things that they invested in. And all of these things are happening, but I don't think they're going to be as open about it. What I noticed that I figured was at least worth talking about is that you have a Russia, China, and Iran joint naval drill right now going on. And I think the shared interests of countering the U.S. influence, whether it be with the U.S. Navy militarily or on a broader sense, globally as a this trend of moving away from the dollar and the hegemony and the influence is continuing. There will be things to talk about month over month, and there will be I believe, a emphasis on a Western slant on all the media reporting to make it look like it's nothing, but they are not ending their aspirations. And when you see joint naval exercises again between Russia, China, and Iran, that should carry a significance that people need to understand. That's, to me, their way of saying, no, we're not going away. just because President Trump is here, we still have our agenda, and our agenda will continue. They think, and even the way Trump talked about recently here about, he was asked, I think, by Maria Bartiromo, and he says, yeah, we need to think more like China does. Instead of thinking quarter to quarter, we need to think in terms of 100 years. So that's the way that they think, and I think that they are continuing with their development. And maybe it was the best thing to happen. Pump the brakes a little bit, really solidify the way that they're going to do things. And the whole concept of a common currency, that you can put that on the back burner. You could argue gold is already acting as a common settlement currency for these nations that are trading in local currencies, settling in gold, and continuing to advance their agenda. Joint military exercises certainly sends a message, when you have these three entities collaborating, and makes you wonder, when two of the three are nuclear powers, how far behind is Iran now that they are joining in this endeavor? These are things that should be taken, again, very seriously. And maybe this is part of the reason why all of a sudden you've seen this, this massive shift from risk on to risk off. Just like that. I mean, I've never seen such a shift from massive euphoria, risk on, everything's amazing, to all of a sudden you look at the insiders and the hedge funds that are moving away from this. It's almost like these people know exactly what is coming, just like Jamie Dimon does, just like Warren Buffett does. It's not going to be an easy transition, an easy lift for whatever Trump wants to do. And I don't think he's dissuaded these countries from continuing on their agenda, just maybe in a little bit more opaque manner, not so much in your face. Even though this is kind of in your face, it certainly, I think, is worth mentioning that, yeah, this means to me that they're still moving forward with the agenda.
For now, silver is benefiting from the same economic uncertainties and supply chain disruptions that have driven gold's record-breaking performance. It is still uncertain whether it can sustain this momentum and establish itself as a leading safe haven asset. With silver shortages intensifying and de-dollarization accelerating, how will global markets respond to these seismic shifts in the months ahead? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.